Good morning, students. Welcome you all on the video lecture, this live virtual classes of Board of Studies of ICAI. Students, today I'm going to cover Ind AS 36, which is on impairment of assets. So students, I'm not feeling well today. And hence I will switch off my video. So probably you will not see my video, but the PPT, the Excel file, and of course, the explanation will go on. So this is just for your information. So students, if I talk about impairment of asset standard, right? This impairment of assets in Ind AS 36. In our accounting standards, we have AS 28, accounting standard 28. Largely Ind AS 36 is aligned with accounting standard 28. Largely, I'm not talking about 100%. There are few differences between AS 28 and Ind AS 36. But if I talk about from the perspective of accounting, reporting, from the perspective of solving the questions, largely it is in line with accounting standard 28. So in AS, we have accounting standard 28. In Ind AS, we have Ind AS 36. In IFRS, we have IAS 36. Okay, IAS 36. So these are the three standards, which is in accounting standard, Ind AS and IFRS. So why I always talk about IFRS standard? Because this Ind AS are converged version of IFRS, and Ind AS standards are notified from these Ind AS standards are prepared or drafted from IFRS standard. Okay. So students, first of all, it is important to understand that this standard takes care of impairment of assets, right? Impairment is a negative word. Impairment is not a positive word. So if there will be impairment of liability, is it a negative thing? Impairment of liability means write back of liability, right? So there is nothing called impairment of liability. There is a write back of liability, write back of creditors written back. Okay. So this standard does not covers liability impairment. This standard covers asset impairment, right? Because impairment of asset is a negative aspect to the company. Impairment of liability is a positive aspect to the company, and this standard does not take care of impairment of liability because there is no word called as impairment of liability. It is liability written back. Okay, so we will be only talking about impairment of asset. Now, sir, what is meant by impairment and how it is different from depreciation? How it is different from depreciation? Okay. So let me explain with the help of an example. For example, Vignesh has purchased a car. Okay. He has purchased a Maruti Brezza car. Okay. And that car was a diesel car. Maruti Brezza diesel car. Okay. Students, when Vignesh has purchased Maruti Brezza diesel car, it has costed him 10 lakh rupees. Okay. And the life of the car is 10 years. So what is the carrying value of the car at the end of the first year? What is the carrying value of the car at the end of the first year? Yes, 9 lakh. Cost minus depreciation. Cost minus depreciation. Okay. Which is 9 lakh rupees. Are we all agree with 9 lakh rupees?
Yes.
Now what happened? This was a diesel car and government has announced, there was an announcement from the government side, and government has announced that diesel car will be banned on the Delhi roads after 6 months. So now tell me, after this announcement, if Vignesh will go and want to sell this car, right? Technically speaking, the carrying value of the car was 9 lakh rupees because what Vignesh was expecting, that the cost of the car was 10 lakh rupees and the life is 10 years. So the carrying value of the car will be 9 lakh rupees, means 1 lakh rupees depreciated, and technically speaking 9 lakh is the value which is there for this car. Okay. So but after this announcement, when Vignesh went to sell this car into the market, right, like Kirti Nagar market or some other car market in Delhi, don't you think the value of the car will go down? The market value of the car will go down? Yes. because of this negative temperament, because of this announcement. But before and after announcement, do you think that the efficiency, productivity of the car will go down? The car which was there before announcement, before such announcement, and the car which is there after such announcement, it is the same car. It is the same car. The car was giving a mileage of 15 km per liter. This car is giving the same mileage. The car was rough and tough. It was still rough and tough. It is still rough and tough. There is no any problem in the car, right? But the market value has suddenly gone down. Why? Because of this announcement, because of this announcement. Okay, friends. And when Vignesh went to sell that car, so the market value comes out at 7 lakh rupees. Cost was 10 lakh rupees. The first year depreciation was 1 lakh rupee. So cost minus accumulated depreciation is 9 lakh rupee, but the market value comes out at 7 lakh rupee. So what is this 2 lakh rupee? What is this 2 lakh rupees? This 2 lakh rupees impairment loss. This 2 lakh rupees impairment loss. So friends, if I will compare my impairment with depreciation, depreciation is a systematic charge to the P&L, right? And even the definition of the depreciation is systematic allocation of depreciable amount over the useful life of the asset, right? And if I talk about impairment is like one-off situation. Impairment is one-off situation. Impairment is not a systematic charge, it is a one-off situation. Okay. Students, depreciation is a consumption-based charge. Okay. So you remember in Ind AS 16 and Ind AS 38, as I told you, that depreciation is on the basis of usage of the asset. Depreciation is on the basis of consumption of the asset. Depreciation is on the basis of future economic benefit of the assets, right? If the future economic benefit is consistent, the asset consumption is consistent, right? In that case, your straight line method is more appropriate. If it is a reducing balance consumption, your WDV is more appropriate. If it is on the consumption based, your unit of production method is more appropriate, right? So depreciation is like a consumption based. But whether impairment is also consumption based? The answer is no. In this example of car, only just because of this announcement, the value of the car has gone down. Okay. So it's an event based. It's an event based. Okay. So depreciation is a regular expense. Every year till the useful life of the asset, depreciation will always come in the books of accounts. But impairment is one time hit. Impairment is like an extra dent to the P&L. Okay. So this is how it is. Okay. Friends, have you understood the difference between a depreciation and impairment? Right? Depreciation and impairment. Depreciation is a systematic charge to the P&L. It's a consumption based, and depreciation is a regular expense. But if I talk about impairment, impairment is a one-off situation. It's an event based and it's a one-time hit to the P&L. Okay. So this is the basic difference between depreciation and impairment. And whenever you have to compute the carrying value of the asset, it is cost minus accumulated depreciation minus accumulated impairment losses. Okay. So let me see who all have joined so far. I'm just setting the context of this standard. So I can see a lot of students have joined. I can see Abrakesh has joined. So good morning, Abrakesh. Good morning, Tushar. Good morning, Mamta. Good morning, Monica, Niranjan. Good morning, Nisha. Good morning, Ginny. Good morning, Pooja. Good morning, Shilpa ji. Good morning, Sumit. Good morning, Usha. And a few people have also joined on this online portal. So good morning, Hemant. Good morning, Rajat, Radhika. Good morning, Rahul. Okay, so students, today I'm not feeling well and hence I have decided to switch off my video. But I hope you guys are okay with that. Okay. And my PPT Excel file and my explanation flow will be the same. Probably my pitch may not be louder as it was in every classes. So probably you can feel some, lack of energy or some less energy in the today's session. Okay. But not to worry. But I'll ensure that, whatever concepts I'm explaining, it has to be explained properly. Okay. So there is no doubt about that. So thank you, Abrakesh and Sumit. Yeah. So let's move on. So we understood the difference between depreciation and impairment. Okay. So now, friends, let's come to the agenda, right? The basic thing which the student used to ask me, sir, how depreciation or how impairment is different from depreciation, and hence, before discussing agenda, I thought of let make it clear that how impairment is different from depreciation. Technically, impairment is an accelerated depreciation. Okay. Coming to the agenda, we'll talk about the objective, scope, and meaning of impairment loss. Of course, objective and scope is more of a theoretical in nature, not relevant from the exam perspective. But meaning of impairment loss, we will spend some time in understanding the meaning of impairment loss. Identification of an asset that may be impaired. So while we have covered three, four, asset-based standards so far, we have covered Ind AS 38, we have covered Ind AS 40, we have covered Ind AS 16, and we have also covered Ind AS 23 borrowing cost, right? In all these standard, in all these standard, we have covered that, in all these standard, we have covered that whenever you compute carrying value, there is an element of accumulated impairment loss also, right? Means whenever you have to compute the carrying value of an asset, you have to see whether there is a element of impairment is there or it is not there. Okay, you have to see that. So friends, we need to identify that an asset may be impaired. This impairment is not a theoretical exercise, it's a practical exercise, and it's a lengthy exercise practically. And hence, this standard has given you some guidance that when to identify and how to identify an asset that may be impaired. Then we will discuss about measurement of recoverable amount in this particular standard. We will be talking about recognition and measurement of impairment losses, how to recognize and how to measure the impairment losses. We will be talking about cash generating unit and goodwill and corporate assets. Friends, while you guys have heard about the concept of cash generating unit, but I will discuss this in detail, the concept of cash generating unit and the goodwill, how this goodwill is going to be allocated, what is the treatment of goodwill in case of a impairment on cash generating unit. We will also discuss the concept of corporate asset, how to compute impairment on a group of asset if a corporate asset is also there. Then we will be discussing and understanding the allocation and reversal of impairment losses. And the last part is disclosure, of course, not relevant from the exam perspective, but yes, for the sake of completeness, I have kept it in my PPT just for your reference. Okay. What is the objective of Ind AS 36? The objective is to ensure that assets are carried at no more than their recoverable amount. Friends, you remember the golden rule of accounting? Debit what comes in, credit what goes out. Debit all expenses and losses, credit all income and gains.
Yes.
Debit the receiver, credit the giver. I think these are the alphabets for any chartered accountant, correct? Like for every human being, what are the alphabets? A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, Q, R, right? These are the A to Z is the alphabet. But if you ask what is the alphabet for a chartered accountant, he will answer three things. Number one, he will say that my alphabet is golden rule of accounting. Then he will say that my next alphabet is element of accounting. What is that element? Elements of financial statement is asset, liability, equity, income, and expenses. Correct? So then he will say then. So my next alphabet is what? Four pillar of accounting: recognition, measurement, presentation, disclosure. Correct? So friends, whenever we talk about asset, we have to be conservative, right? You remember when I was talking about machinery in Ind AS 16, and I have given you an example that the company has imported a machine from China. The moment the machine has reached to the factory in India, the government has banned the output from that machinery. You remember this one example I have taken in Ind AS 16. And I have told you guys that the moment the machine reached to India and the government has banned the output from that machine, The future economic benefit is not expected from that machine. While it is a machine, Ind AS 16 is applicable. It is a property, plant and equipment. But the moment government has given this announcement, this machine requires an impairment. Means this machine will be de-recognized. It has to be impaired, right? Because on the asset side, we have to be very conservative. We have to be very conservative, okay? In your real life, you must have seen the provision for doubtful debts. Have you seen the provision for doubtful debt in the real balance sheets? You must have seen in the real balance sheet provision for doubtful debt. Being an auditor, if you estimate that this money will not be recoverable, this money will not be recovered, you will say your clients, please provide your doubtful debt. It becomes your doubtful debt and please make a provision for that. Correct? But at the same time, if the client has a creditors, if the client has a creditors and the client wants to write back the creditors, will you allow him very easily to write back the creditors? Answer is no. Being an auditor, we used to ask so many questions that why you want to write back this liability? Are you not obligated to pay? What is the contract terms? Whether it is a time barred, whether 3 years has already been passed. So you ask a lot of questions. Okay. So friends, on the asset, we always become conservative and we say that we have to be continue to measure the asset or to hold the asset in the books of accounts till the time its recoverable value is more than the carrying value. If the recoverable value of the asset has gone down, means the future economic benefit of the asset is decreasing, is getting down. So we have to check the impairment, and if there is any impairment loss, we need to book the impairment loss. Okay. So on the asset side, we have to ensure that the assets which are there in the balance sheet must be carried at not more than that their recoverable value. For example, if a company has purchased a building and due to some legal announcement, the price of the building has gone down. Okay. It was purchased at 1 crore rupees. The price has gone down at 80 lakh rupees. So this 20 lakh rupee has to be recognized as an impairment loss. And this building should not be carried in the books of accounts at more than 80 lakh rupees. Okay. So friends, this standard is a very conservative standard which says that your asset should not be presented at more than their recoverable value. Okay. Friends, then this standard says that how to determine a recoverable amount. Okay. So we will be discussing, we will be understanding that how to compute the recoverable amount. This standard also talks about how to allocate the impairment loss. Whenever it talks about allocation, it talks about allocation of impairment loss on the cash generating unit, right? This standard also talks about the reversal of impairment loss, right? When an impairment loss will be reversed. And then the last one is disclosure. Friends, this standard is applicable to all the asset except, all the asset except. So technically speaking, this standard is applies to all the asset except few standards. Inventory. Can you tell me why Ind AS 36 is not applicable on inventory? However, inventory is also subject to impairment.
It's
Sir,
covered by Ind AS 2.
its
Yes.
recognition criteria already says that we have to value inventory at NRV or a cost whichever is less. So impairment or any decrease in value effect has already been there.
Thank you, Pooja. Nicely explained. So yes, you are right. Ind AS 2 says that inventory has to be measured at cost or NRV, whichever is lower. It means Ind AS 2 itself gives the criteria of impairment. It already gives the guidance on impairment. It says that if your net realizable value or recoverable value is lower than the cost, you need to charge the impairment. You need to book the impairment loss. Very good. So this Ind AS 2 inventory has already given the guidance of impairment. It is covered under Ind AS 2 and hence Ind AS 36 is not applicable. Ind AS 115, contract asset and asset arising from cost to obtain or fulfill a contract. You remember in Ind AS 115, I have spoken about cost of obtaining a contract, cost of fulfilling a contract, right? So if the revenue is not foreseeable, if the revenue is not predictable, if the revenue is not certain, in that case, the asset which is a cost. The cost of contract has to be charged off to the P&L, right? So this contract assets and assets arising from cost to obtain a contract or fulfill a contract is already covered under Ind AS 115, and hence that contract asset will not be covered under Ind AS 36. Deferred tax asset. So deferred tax asset is already covered under Ind AS 12. It says that if your deferred tax asset is not expected to be recoverable, you have to remeasure your deferred tax asset, and you have to adjust your deferred tax asset. Asset arising from employee benefit, the guidance on plan assets is already given in Ind AS 19 employee benefit standard. Biological asset measured at fair value less cost to sale. When you understand Ind AS 41, you will be able to understand that this biological asset measured at fair value less cost to sale, right? The biological asset by its nature and as per the standard, it has to be measured at fair value. So if it is getting measured at fair value, so the impairment aspect is already covered under the fair value concept, okay? And hence 36 is not applicable. On insurance contract asset, 36 is not applicable. Why? Because 104 is applicable. On non-current asset classified as held for sale, friends, after impairment standard, so we will be covering this impairment of asset standard in two classes, right? So we have started today and we will finish it off by Tuesday, okay? So friends, after that, I will be covering Ind AS 105. When I will be discussing Ind AS 105, you will be able to know that the non-current asset classified as held for sale is also required to be measured at fair value. Okay. So hence the concept of impairment is already inbuilt in that fair value, and hence 105 is applicable, 36 is not applicable. Financial assets like debtors, like loan assets. So the impairment on financial assets is already covered under Ind AS 36. Sorry, it is already covered under Ind AS 109, and hence it is not covered under Ind AS 36. For example, investment in mutual funds, right? You have invested 1 lakh rupee in mutual funds. You remember in the last 1 week or last 10 days, the market has tremendously, gone down. The market has blasted like anything. So friends, mark to market concept. What is a mark to market concept? So standard says that this investment in mutual fund has to be remeasured at fair value. For example, you have invested 1 lakh rupee in mutual fund. Okay. In September, the market was doing very well. So this 1 lakh become 1 lakh 20,000. So you have recognized a gain of 20,000. But in October, the market has declined by 1500 basis points, 1500 points probably. So friends, in that case, this 120 become 90,000, right? So in that case, you have to book an impairment loss of 30,000. Okay. So this is already inbuilt in Ind AS 109, and hence Ind AS 36 is not applicable. Sir, then Ind AS 36 is applicable on which part? Largely, friends, Ind AS 36 will be applicable on property, plant and equipment. Ind AS 36 will be applicable on investment property. Ind AS 36 will be applicable on intangible assets, and Ind AS 36 will be applicable on goodwill acquired in business combination, goodwill arising in business combination, right? So which are the four items on which Ind AS 36 is largely applicable? Ind AS 36 will be largely applicable on PPE, on intangible assets, on investment property, and goodwill arising in business combination. Okay. Correct. Now, what is the meaning of impairment loss? What is the meaning of impairment loss? First of all, friends, we understood that impairment loss has to be charged on assets. Correct. Now, it could be an individual asset, or it could be a group of assets, right? Either it could be an individual asset, or either it could be a group of assets. Okay. Either it could be a group of assets. So friends, in this standard, we will be talking about the individual asset impairment concept. As well as in this standard, we will be talking about the impairment on the group of assets. What is the name of the group of assets in this particular standard? What is the name of the group of assets? What is the name of the group of assets in this particular standard? I'm
Cash
asking.
generating units.
Cash generating unit, CGU, CGU, cash generating unit. This is not the new name. This name was there, the concept was there in accounting standard 28 as well. So cash generating unit, we will be discussing impairment loss measurement on individual asset as well as cash generating unit, right? Standard says that impairment loss is the amount by which the carrying amount of an asset or cash generating unit exceeds its recoverable amount, For example, in the example of Maruti Brezza car, the carrying value was 9 lakh rupees, which is cost minus accumulated depreciation. And the market value was 7 lakh rupees, right? The recoverable value was 7 lakh rupees. So what is impairment loss? Impairment loss is equal to carrying amount minus recoverable amount. 9 lakh minus 7 lakh. 2 lakh rupees is the impairment loss. Okay. Clear? Simple. So whenever your carrying amount is greater than your recoverable amount, then there will be a situation of impairment loss. Impairment loss is equal to carrying amount minus recoverable amount. Impairment loss is equal to carrying amount minus recoverable amount. Correct? Now, what is the recoverable amount? What is the recoverable amount? We understood that carrying value is 9 lakh rupee, recoverable value is 7 lakh rupee, then 2 lakh rupee is the impairment loss. We understood that. Sir, how to measure recoverable amount? How to measure recoverable amount? Anyone who has some memory on of from Ind AS, from AS 28? How to measure recoverable amount? The concept is same in AS 28 and Ind AS 36. Ginny is saying that recoverable amount is fair value less cost to sell, or value in use, whichever is higher, or value in use, whichever is higher. Okay. So uppercase is saying fair value less residual. Friends, the fair value has to be computed. The fair value has to be computed. This recoverable value is a fair value, right? Recoverable value is a fair value. And the fair value has to be computed by two ways, right? By two ways. Number one, you have an asset. You go to the market and sell the asset, right? You go to the market and sell the asset. So number one, you get the future economic benefit from the asset by selling the asset, right? By selling the asset. Number two, you get the future economic benefit by using the asset, okay? By using the asset. I have a flat. I have given that flat on a rent basis. I have given that flat on rent. I'm using the asset and I'm getting a future economic benefit by way of rental from that flat. Number two, I want to sell this flat. So I will get the future economic benefit by the proceeds from the sale price of the flat. Okay. So friends, this recoverable amount has to be measured by two ways. Number one, whenever you want to sell this asset to the market, so it is a market driven approach, right? What is the market price of that asset, right? So this fair value concept is more from the exit price concept. Exit price concept का मतलब आप उस asset से exit करना चाहते हो. When you want to exit from that asset, what is the price which market is ready to pay? Okay, it is known as a fair value. It is known as a fair value approach. Okay. The number two approach is value in use. I want to give you one trick, right? Accountancy is very simple, I would say. Have you learned this active voice and passive voice in your grammar in your school days? Active voice and passive voice.
Yes.
Ram is eating a mango and mango is eaten by Ram, right? You just need to apply that concept. Active voice, passive voice. Active voice, passive voice. Impairment of asset. Asset is impaired. Value in use, right? Value in use. So the value which is getting from the use of the asset, right? So not from the sale of the asset, from the use of the asset. From the use of the asset. Okay. Carrying value, the value which you are carrying. Okay. So whenever you find some, some 2, 3 words, some phrases, if you apply the passive voice, you get the meaning in accountancy. So I can bet on that. Whenever you apply the passive voice, it will give you the meaning of what is that. Okay. So friends, the fair value approach is more from the market driven approach, but value in use approach is more from the usage approach, usage. If you will use the asset for the lifetime, or if you will use the asset for the economic life, what is the value which you are getting from the use of the asset? From the use of the asset. For example, when I will use the asset, the life is 20 years and I will be able to get the rentals. Okay. I will be able to get the rentals. So when I will compute the present value of future rentals, it will give me the value in use. It will give me the value in use. Okay. So fair value is more from the sale of the asset. Value in use is more from the use of the asset. So friends, the recoverable amount of an asset or a group of asset, which is a cash generating unit, is higher of fair value less cost to sell and value in use. Fair value less cost to sell and value in use, right? Let's discuss this example. The carrying value of a building in the books of ABC Limited as at 31st March 2016 is 250 lakhs. As at that date, the value in use is rupees 200 lakhs and fair value less cost of disposal is 188 lakhs. Calculate the impairment loss in the books of ABC Limited. First of all, what is the carrying value? What is the carrying value? 250 lakhs. What is the recoverable amount? It is higher of fair value less cost to sell and value in use. So what is fair value less cost to sell? 188. What is value in use? 200. So which is higher? 200 and 188. 200 is higher. So recoverable value is 200 lakhs. Carrying value is 250 lakhs. What is the impairment loss? What is the impairment loss? 188.
50.
What is value in
50
use?
lakhs.
200. So which is higher? 200 and 188. 200 is higher. So recoverable value is 200 lakhs. Students, can you please go on mute? I think somebody has also. Students, can you please go on? Students, can you please go on mute? So recoverable value is 200 lakhs. I think somebody has played YouTube video also. So impairment loss is 50 lakhs, 250 minus 200. Okay. Let me take you on the Excel file and let me explain the concept of this fair value and value in use. Please confirm once the Excel file is visible. Is it visible now?
Yes, sir.
Okay. Recoverable amount. Recoverable amount. This recoverable amount is higher of two element. Higher of what? Fair value less cost to sell. Fair value less cost to sell or cost of disposal. And value in use. And value in use. So this is the recoverable amount. It is higher of fair value less cost to sell and value in use. So what is my fair value less cost to sell? My fair value less cost to sell is a market driven value. Market driven value. Whereas my value in use is entity specific value. Entity specific value. Okay. Entity specific value. For example, ICAI has told that a chartered accountant has to charge a certain amount of fees for a certain type of audit. Okay. Or for an income tax filing or tax audit. For example, a client came to a chartered accountant office. A client wants to file its income tax return. His income is 50 lakh rupees. He belongs to Delhi, right? He's a salary class employee. So he's a salary class person and he wants to get the income tax return filed. So he went to a big four firm, right? He went to EY or went to Deloitte and he asked, I want to file my income tax return. What is the filing fees? So what do you think? What fees Deloitte or EY will quote? Just a wild thought, just a guess. 50,000 rupees. You're right. So probably Big Four will ask a price or Big Four will quote a fee of 50,000 rupees, right? Then he came to Sumit Jain. Sumit is a fresher chartered accountant and Sumit has recently started his practice. What do you think? What Sumit will charge for filing an income tax return? Sumit is charging 5,000 rupees. The same client, the same assessment year, same client, same level of income. It has to be filed with the income tax department. It has to be e-filed, right? Everything is same. Everything is same. Big Four is charging 50,000 rupees and Sumit is charging 5,000 rupees. Okay. And ICAI has told that the minimum fees for filing such income tax return is 10,000 rupees. So friends, in this example, what is the fair value of this income tax return filing? What is the fair value of income tax return filing fees? 10,000 is the fair value. So 10,000 is the fair value. But what is the value in use? For Big Four, it is 50,000 rupees. For Sumit, it is 5,000 rupees. So friends, the 50,000 and 5,000 is an entity specific value, but the fair value is 10,000 rupees, right? So value in use is an entity specific value. Value in use is an entity specific value, right? So the fair value less cost to sell is a value which can be derived from exit point of view. This fair value is a value which is derived from exit point of view. From exit point of view means from selling the asset. You went to market and you ask the price. What is the price of my car if I want to sell this car? Okay. Okay. So this is more from the exit point of view. But for value in use, value can be derived from the continuance point of view. Value which is derived from the continuation point of view. Okay, that is use the asset. Okay, that is use the asset. So friends, in case of computing the fair value less cost of disposal, you need to reduce the cost of disposal, cost to sell from the fair value, right? Fair value less cost of disposal. And in case of value in use, you need to compute the value in use by present value of future cash flows. Present value of future cash flows. Okay. Clear? So this is the difference between fair value less cost of disposal and value in use. Okay. Example. Let's do some example. Let's discuss one example of value in use. The company is leasing the machinery on a rental basis. The remaining life of the machine is 5 years. The company expects rupees 1 lakh of rentals by leasing for the next 5 years. The discount rate is 5%. Compute the value in use of this asset. How to compute the value in use of this asset?
Present value of this 1 lakh rupees that has to be received in 5 years.
Yes, this company expects 1 lakh rupees per annum. 1 lakh rupees rentals. 1 lakh rupees rentals per annum by leasing this asset for next 5 years. Okay. So you need to Compute the present value of future cash flow. Year 1, 2, 3, 4, 5. Your amount. Future cash flow. Future cash flow. Future cash flow. What is the future cash flow? 1 lakh rupees. Then your present value factor. What is the present value factor at the rate of 10%? 1 divided by 1.1. This divided by 1.1. Sorry. This divided by 1.1. So on and so forth. This is the number of present value factor. Then what is your present value? Your present value, when you multiply this FCF multiply by PVF, it will give you PV, and this is your total. This is what it is. Okay, friends. So what is the value in use? The value in use is 379. 379,079 is the value in use. Okay, 379,079 is the value in use. Okay. Now, for example, the fair value of this machine is 4 lakh. The fair value of this machine is 4 lakhs. Okay. The fair value of this machine is 4 lakhs. And the selling cost will be and the selling cost will be 50,000 rupees, will be 50,000 if the company wants to sell the machine. If the company wants to sell the machine. The carrying value of the machine is rupees 4,25,000, 4.25 lakhs. Compute the recoverable amount and impairment loss. Compute the recoverable amount and impairment loss. Okay. So I've extended this question. In this question, what is my fair value less cost to sale? What is my value in use in this question? In this question, my value in use is 379,079. What is my fair value? My fair value is 4 lakh rupees. 4 lakh rupees. What is my less cost of disposal? My cost of disposal is how much? Minus 50,000 rupees. What is my fair value less cost to sell? My fair value less cost to sell, cost of disposal is how much? It is this plus this. Okay, 3,50,000. So what is my recoverable value? What is my recoverable value?
379,070.
Recoverable value is higher of above two, higher of fair value less cost to sell and value in use. Okay, which is 379,079, which is 379,079. Okay. And what is my carrying value?
4,25,000.
4,25,000. My carrying value is 4,25,000. 4,25,000. What is my impairment loss now? What is my impairment loss?
45,921.
Impairment loss. And the impairment loss is carrying value minus recoverable value. Recoverable value. This is how you will solve in the exam. Okay. So don't answer straightforward. If this kind of a question will ask an exam, don't go straight forward. Write all the formulas and then show the calculation and then get to the answer. Okay. So 45921 is the impairment loss. Recoverable value is 379079. In this example, we have discussed how to compute the present value, right? How to compute the value in use, this fair value less cost to sell, and this is your recoverable value, and this is impairment loss. Correct? Okay, so let me take you again back to the PowerPoint presentation. So let's say instead of this one, let's flip this question. Let's extend this question. Example number 2. In the above question, in the above example, what will be the impairment loss if the carrying value of the machine is, if the carrying value of the machine is not, if the carrying value of the machine is not, if the carrying value of the machine is 3.75 lakhs instead of 4.25 lakhs, instead of 4.25 lakhs. What will be the impairment loss if the carrying value of the machine is 3.75 lakhs instead of 4.25?
4,079.
Sorry?
4,079.
4,079. Okay. Anyone who has a different
No
answer?
impairment loss. There will be no impairment loss.
There will be no impairment loss. Very good. Why there will be no impairment loss? While all the students are saying no impairment loss, but why? Because
Carrying value.
your carrying value is lower than the recoverable value. Whatever you are showing in the balance sheet, right? It is lower than the market value. The market value is higher than what you are showing in your balance sheet. So no impairment is there. Had it been a PP, and if the company has opted for revaluation model, in that case, this 4,079 will be revaluation surplus, right? But if the company has opted for the cost model, in that case, no impairment will be there, and even this revaluation will also not come into picture. क्योंकि cost model adopt किया है, correct? So in this case, the carrying value is lower than the recoverable value, lower than the recoverable value, then there is no impairment. Okay. Is that clear, Pooja?
Yes, sir.
Friends, let me talk about a common mistake which normally students used to make in the examination paper, right? The question is asking, there is a property, plant and equipment, okay? And the carrying value of the property, plant and equipment is 3,75,000. And the question has given you 1 lakh rupees of rental for that property, plant and equipment for 5 years. 10% is the discount rate. So you have computed the value in use. Okay, 379,079. And the carrying value is 3,75,000. Okay. And the fair value less cost to sell is also given in the question, which is what is the fair value less cost to sell? So the fair value less cost to sell is 3,50,000, which is given in the question. And the carrying value is 3,75,000. And the question also talks about that the PP has to be stated at cost model. Okay. And the ask of the question is compute the impairment loss. So generally what happens, either student write that impairment loss is 4079, which is recoverable value minus carrying value. Ideally, it has to be carrying value minus recoverable value. Matlab, when your carrying value is higher than the recoverable value, then only impairment will come into the question. Otherwise, no impairment will be there, right? So this is first mistake which normally students may make. He is just seeing the numbers. He just looking at the numbers that okay, एक नंबर तो बड़ा है दूसरे नंबर से, उसमें से उसको माइनस कर दो, वो इम्पेयरमेंट लॉस हो गया. दूसरा, if the student is little bit smart, what he will do or what she will do, वो इम्पेयरमेंट लॉस तो कुछ नहीं करेगा, पर क्वेश्चन पेपर में लिख के आएगा कि द कंपनी हैज टू रिकॉग्नाइज अ रीवैल्यूएशन सरप्लस ऑफ 4079 एंड क्वेश्चन इज टॉकिंग अबाउट कॉस्ट मॉडल. करेक्ट, द क्वेश्चन इज टॉकिंग अबाउट कॉस्ट मॉडल. क्या करना चाहिए रिवैल्यूएशन सरप्लस अगर कॉस्ट मॉडल है तो?
नहीं.
Yesterday we have understood in investment property there is only a cost model. Revaluation model is not allowed. And we haven't talked about revaluation surplus. Why? Because revaluation model ही नहीं, तो revaluation surplus की बात कहां से करें? Correct? So please keep this in your mind. If you are applying a cost model and there is a impairment, तो impairment loss तो लोगे. क्यों लोगे? Carrying value का फॉर्मूला ही है. Carrying value is equal to cost minus accumulated depreciation minus accumulated impairment losses. Okay? तो आप उसके फॉर्मूला में ही लिखा है. But if there is a gain, if there is a revaluation surplus and you have opted for a cost model, you are not allowed to recognize the revaluation surplus. Is that clear to everyone? बहुत छोटी सी बात है, बट जब तक हम क्लासेस सुनते हैं, क्लासेस लेते हैं, और जब हम एग्जाम में अपीयर होते हैं, it makes a lot of difference. Because my dear friends, in exam the mind works in a different manner, the mind works in a different way, right? You are looking at the question which has come from 35 Ind AS or 39 Ind AS, and it's a mix of question, right? So you have to read the question the way I was reading yesterday. I was taking a lot of pause in the question. I was asking in my mind. I was answering in every statement, and then I was moving on. Okay. So you have to read the question in that way only. Okay. So friends, with this example, it is clear. The carrying value is lower than the recoverable value, then there is no impairment. Further, if the company has opted for revaluation model, the company may check for revaluation surplus. Okay, perfect. Very good. So friends, so far we discussed about the recoverable value, we discussed about the carrying value, recoverable value, and if carrying value is more than recoverable value, then the company needs to charge the impairment loss. Okay, so we talked about this, and recoverable value is higher of fair value less cost to sell and value in use. Okay, now identification of an asset that may be impaired. Friends, your balance sheet has two sides, asset side and liability side. This standard is applicable to asset side. Okay, if I talk about the large manufacturing organization like Reliance Industries, they have lakhs of crores of property, plant and equipment, right? They have lakhs of crores of investment property. They have thousands of crores of intangible assets. They have thousands of crores of goodwill arising in business combination. Correct? And standard says that impairment, you have to check the impairment on every reporting date. Sir, check कैसे करें impairment को? How do we check the impairment? Whether impairment is like a BP machine. You have the BP machine at your home, blood pressure machine, and you are checking your blood pressure. Is it as simple as that? Answer is no. This checking of impairment is a large exercise. You need to engage the valuer, right? You have an investment property, you have a property, plant and equipment. If you see the PP schedule, if you see the property, plant and equipment schedule in notes to accounts of Reliance Industries, you will find lot of class of assets are there. They have aircraft, they have helicopters, they have boats, they have yachts, they have machinery, they have land, they have building, furniture and fixtures, office equipment, power plant. They have multiple class of asset. I'm not talking about asset, I'm talking about class of asset. They have factories, they have plant. So friends, when you have to check the impairment testing, the simple ask is you have to compute the fair value. You have to check the fair value. इस property की आज market value क्या है? Correct. For that, you need to engage the valuer. For that, you need to engage the valuer. Okay. So he will do the valuation. Or sometimes you need to engage the business valuers who will estimate the future cash flows, do all this discounting calculation on the DCF basis, right? So it's a long exercise. And that is why a guidance is given in Ind AS 36 that first of all, you need to identify that asset may be impaired. You need to identify that asset may be impaired. So friends, instead of doing the calculation of impairment, right? First of all, you need to select what are the assets which requires impairment testing, Okay. First, you need to do the impairment testing. Okay. But when the impairment testing is required, standard says that an entity shall assess at the end of each reporting period, an entity shall assess whether there is any indication that an asset may be impaired. Is there any indication the asset may be impaired? If indication exists, estimate recoverable amount. If indication exists, right? So friends, at the end of each reporting period, the company needs to check, is there any indicator that an asset may be impaired? If no indicator is there, the asset is performing very well. Okay. The company is earning a lot of money. The asset is giving a lot of future economic benefit, right? There is no damage, no declining trend, nothing. No negative announcement, no technological outdation, nothing. So there is no indicator that the asset may be impaired. Means the value of the asset may have gone down. There is no indicator. In that case, you are not required to do any impairment testing. आपको उसकी फेयर वैल्यू निकलवाने की, वैल्यू इन यूज निकालने की कोई जरूरत नहीं है. क्यों? अगर कोई इंडिकेटर नहीं है तो. बट अगर there is an indicator that the asset may be impaired, right? If indication exists, in that case, you have to estimate the recoverable value. You have to estimate the recoverable amount. Okay? Okay? You have to estimate the recoverable amount का क्या मतलब हुआ? Is it a Excel calculation? No. You have to check the fair value less cost to sell. You have to check the value in use. Then whatever is the higher value, it will become your recoverable value. Then you need to compare that recoverable value with the carrying value. And if your carrying value is higher than the recoverable value, then only there is an impairment loss. Okay? ये बात समझ में आई कि आपको सीधा इम्पेयरमेंट टेस्टिंग नहीं करनी, पहले आपको चेक करना है whether that asset may be impaired. Okay? Let me give you an example. The classic example of impairment is like computer, laptop, mobile phone. I have purchased a mobile phone, let's say iPhone 15. Okay? iPhone 15. It has costed me 1 lakh rupees. It has costed me 1 lakh rupees. Okay? After 6 months, when I bought this iPhone 15, iPhone 16 got launched. Okay? The carrying value of my iPhone 15 is 1 lakh rupee. And this iPhone 16, a upgraded model, was launched by Apple, right? And this phone was launched at 1,10,000 rupees, 1.1 lakh rupees. Friends, don't you think that due to the launch of iPhone 16, the value of my iPhone 15 must have gone down? Nobody would like to buy iPhone 15, right? Because everybody wants to go for iPhone 16. They have invested 10,000 rupees more and will go to iPhone 16, correct? So don't you think due to the launch of iPhone 16, the value of iPhone 15 must have gone down because the upgraded model has been launched? Yes or no? जब भी
Yes, sir.
टेक्नोलॉजिकल डेवलपमेंट होती है, when the new technology will come, of course the value of the old model, old technology must have gone down. There is a technological thing, correct? So I'm using a vehicle, I'm using a machine, and there is a new technology which is available in the market, right? So people will go for the new technology, not the old technology generally. So this is one of the external indicator. If this is one of the external indicator, if there is a technological development, right? So this is one of the indicator that if the asset is having a technology which is an old technology or which become outdated, in that case you have to see that yes, the indication of impairment exists and you have to estimate the recoverable amount, correct? So this could be the this could be the technological outdatation. There could be the change in the legal environment, like the government has announced the ban of diesel car, right? Due to the ban of diesel car announcement, it becomes an indicator of impairment, and hence you are required to estimate the recoverable amount. Okay, right, friends? Friends, at the end of each reporting period, management should check if there is any indicator of impairment. If indicator exists, do the impairment testing and estimate the recoverable amount. Okay, and estimate the recoverable amount. Is that fine? Is that fine to everyone? Is that fine to everyone? Identification of an asset that may be impaired. At the end of each reporting period, management should check if there is any indicator of impairment. If indicator exists, do the impairment testing and estimate the recoverable amount. And estimate the recoverable amount. Okay. Sir, what are the indicators of impairment? What are the indicators of impairment? Let's go to the indicators of the impairment. There are two indicators like car. कार में कितने इंडिकेटर होते हैं? Left indicator, right indicator. Likewise, in the business, there are two indicators, internal indicator and external indicator. What is internal indicator? Evidence of obsolescence or physical damage, right? The company has bought a machinery. The life of the machinery is 10 years. The life of the machinery is 10 years. After 2 years, the machine met with an accident. The machine met with an accident in the plant, and there is a physical damage in the machine. There is a physical damage in the machine. So this is one of the internal indicator. If the asset has been physically damaged, this is an internal indicator that the asset may be impaired, right? It's an internal indicator of impairment. Indicator. I'm not saying that it will be impaired. I am saying it's an indicator of impairment. Asset remaining idle. Asset remaining idle. The company has purchased the asset, but the company is not able to use the asset. Why? Because the demand is not there. Because the demand is not there. Okay. The company is not able to get the proper efficiency and productivity from that asset. Okay. So if the asset is remaining idle, it is one of the indicator of impairment. I'm not saying that the asset will be impaired. I am saying it's an indicator of impairment and you need to do the impairment testing. Discontinuance, disposal, or restructuring plans. Discontinuance, disposal, or restructuring plans. If the company has discontinued the business operations, okay, or the company has a disposal plans, or the company has a restructuring plans, the company decided to shut down the factory, right? Shut down one of the plant. So this is one of the indicator of impairment. This is one of the indicator of impairment. You know the classic example. आप जब एयर कंडीशन को डी इंस्टॉल करके री इंस्टॉल करते हो फ्रॉम वन प्लेस टू अनदर, राइट, दिस इज एन इंडिकेटर ऑफ इम्पेयरमेंट. व्हाई? उसकी गैस निकलने का डर रहता है. So the more frequent you will deinstall and reinstall your air condition, the value of the air condition goes down. Okay. Why? Because their efficiency and performance started getting down. Declining asset performance. Your asset has a declining asset performance. Earlier, the machine was producing 10,000 unit of output. Now the machine is producing 7,000 unit of output. So there is a declining asset performance. Okay. And hence it is an internal indicator of impairment. What are the external indicators? So internal indicator arise within the company, okay, within the entity. But external indicators are indicators which arise in the market, which is arise in the economic environment, which is arising in the technological environment, which is arising in the legal environment, okay, which is arising in the legal environment. Okay. Example, significant decline in market value. There's significant decline in market value. Okay. And I will give you a classic example here. I have purchased a Samsung S9 Plus phone. There was a Samsung S9, there was a Samsung series. I still remember I purchased in November 2018, right? When this edge phone or that curve phone was launched in Samsung. That phone has costed me 65,000 rupees in November 2018. And I expected the life of the phone is 3 years. Okay. So what is the carrying value after the end of the first year? What is the carrying value? If the life is 3 years, 65, 60, let's for the sake of easy convenience, take the price as 60,000. So I purchased the phone at 60,000 rupees. What is my carrying value? At the end of the first year, 40,000 rupees the carrying value. After 1 year, at the time of Diwali, I was checking the price of my phone on the Flipkart. It was showing 32,000 rupees. It was showing 32,000 rupees. Because in 1 year, Samsung has launched 2 phones. Right? Due to that, the Flipkart, after giving all the discount, was showing the price of my phone as 32,000 rupees. It means there was a significant decline in the market value. So if there is a significant decline in the market value of the asset, while your asset is performing very well, correct, there is no problem in your asset. But if there is a significant decline in the market value of the asset, it is one of the external indicator. It is one of the external indicator that you need to do the impairment testing. You need to check the impairment. Okay. Changes in technological, market, economic, or legal environment. Okay. For example, whenever the government has come up with an announcement, let's say the government has come up with an announcement that 28% GST will be charged on the gaming industry. Okay. Or the government has come up with an announcement that, you know, such and such taxes are required to be imposed on a certain industry, on a certain company. So these announcement, these legal announcement, okay, or these political environment announcement, okay. So these announcement may impact the future economic benefit of the asset from which the company is generating the revenue, company generating the future economic benefit. So these are the indicator of the impairment. Okay. If the technology has changed, like when this, you know, earlier there was a keypad phones, keypad. Now Android phones took over on the keypad phones. The keypad phones are highly used by the either the old persons like your grandfather, your grandmother, okay, only not everyone, few persons, or it is used by some, you know, some Backward classes. Backward classes, I mean to say people from the remote classes, or for example, the rickshaw puller, or for example, the cobbler. Okay. So the people who are less educated, I would say. So these class are only using keypad phones. So when this Android phones started taking over on the keypad phones, when this new technology came, so all these electronic manufacturing company has started doing the impairment testing of their plant and machinery. Okay, whether it requires impairment or it does not require impairment. Okay. So friends, if there is a changes in technological market, technological, economic, legal, or market related environment, so in that case, it is an external indicator of impairment. Changes in interest rate. Why change in interest rate is an external indicator of impairment? Change in interest rate means, for example, interest rate has been increased. Interest rate has been increased. अगर आपका इंटरेस्ट रेट इंक्रीज हो गया तो उससे हाउ कम इट इज एन इंडिकेटर ऑफ इम्पेयरमेंट?
Present value of future expected benefit will be lower than.
Oh, very good. Nice. I was not expecting, honestly. Yes. For example, the discount rate is 10%. So what is the discount rate? Discount rate is nothing. It is derived from the interest rate. Discount rate is an incremental borrowing rate. It's an interest rate. So let's say the cash flow is 1 lakh rupee and the discount rate is 10%. Then what is the present value? 1 lakh divided by 10%. So present value is 90,000, correct? I'm just talking in rounding off. 90,000 is the present value. But if the discount rate becomes 12% because the rate has gone up, in that case, what will be your present value of rupees 1 lakh if discounted at 12%? Hopefully 85,000 or 86,000, correct? So due to the increase in interest rate, your present value of the cash flow has gone down. And hence it is one of the indicator of impairment. Low market capitalization. The company's share price is touching the lower circuit. The market capitalization is getting down. The total value of the asset is 50,000 crore, but the market capitalization is 25,000 crores. So this low market capitalization is an indicator of impairment, right? So if the market price has substantially gone down, the market capitalization of the company has been substantially gone down, then it is an indicator of impairment, and the auditor will ask the company to do the impairment testing to check the impairment. Okay. So friends, these are the indicators. If indicator exists, right? You have to see whether any indicator exists. If the indicator exists, in that case, you have to estimate the recoverable amount. You have to do the impairment testing in detail. मतलब आपको फ्यूचर कैश फ्लो एस्टिमेट करना पड़ेगा, आपको प्रेजेंट वैल्यू निकालनी पड़ेगी, और आपको क्या करना पड़ेगा? वैल्यूएशंस करानी पड़ेगी, वैल्यूअर को एंगेज करना पड़ेगा, राइट? यू हैव टू गो विद द लेंथी इम्पेयरमेंट एक्सरसाइज एंड यू हैव टू चेक द रिकवरेबल अमाउंट. यू हैव टू डू द इम्पेयरमेंट टेस्टिंग. ओके, fine. Friends, there are three assets. As I told you that first the company need to identify whether the asset may be impaired. And for that, at the every reporting date, the company needs to see, is there any impairment indicator, internal or external? If no impairment indicator is there, the company is not required to do any impairment testing. But the impairment indicator is there, in that case, the company has to do the impairment testing. Okay. But friends, there are three assets. There are three assets for which doesn't matter whether the indicator impairment is there or not. That doesn't matter. Means the company is not required to wait for the impairment indicator. The company is not required to wait for the impairment indicator. And in case of three assets, the company has to do the mandatory annual impairment testing. The company has to do the annual impairment testing on a mandatory basis. The company has to do the mandatory annual impairment testing. Fine. What are those three assets? ऐसे कौन से three assets? Let me give you a clue. All these three assets are the intangible assets. पर वो कौन से तीन intangible asset हैं? Number one, intangible asset with an indefinite useful life, irrespective of whether there is an indication of impairment, an entity shall test annually for impairment. Okay. So the first one is intangible asset with an indefinite useful life. Are you able to remember Ind AS 38? The finite life, indefinite life. If there is a finite life, then the intangible asset needs to be amortized. If there is an indefinite life, in that case, there will
No
not be any
amortization.
amortization, and the company has to check the impairment, right? There is no any amortization, but the company has to do the impairment testing, and the company has to recognize the impairment loss, if any. And at the every reporting date, the company has to check whether now the life becomes finite or not. Correct? This is what we discussed in Ind AS 38. Yes. Okay. So the first one is intangible asset with an indefinite useful life. So this intangible asset does not require any indicator to begin the impairment. If there is an intangible asset with an indefinite useful life, the company needs to check the fair value less cost to sell or value in use, right? The company had to do the impairment exercise. Second one is intangible asset not yet available for use. Intangible asset not yet available for use. If there are intangible assets which are not yet available for use, right? Like for example, in process intangible assets, formula patent, which is not yet available for use, is also required in mandatory annual impairment testing. It is more like intangible asset not yet available for use could be your intangible assets work in progress. Goodwill acquired in a business combination. You remember in Ind AS 38, we have discussed various mode of acquisition of intangible asset. And we have discussed that if a company is paying a purchase consideration, which is beyond the fair value of all the assets acquired, so the differential will be goodwill. The differential will be goodwill. Okay. But the company need to check if there are some additional intangible assets which are acquired. If there are some additional intangible asset, the company needs to recognize that, and over and above the balancing figure will be goodwill, right? This is what we discussed, my dear students. The basic mantra, the basic rule is at the end of every reporting date, on the every reporting period, on the every reporting date, the company needs to check whether impairment indicator exists. If impairment indicator exists, then only impairment exercise is required to start. Then only impairment testing has to happen, right? But in case of the three intangible assets, which is intangible asset with indefinite useful life, intangible asset not yet available for use, and goodwill acquired in business combination, for these three assets, the company is not required to wait or to check whether indicator exists or not exists. The requirement is to do the mandatory impairment testing at least on an annual basis. At least on an annual basis. Okay. So friends, let me take you to the Excel file and let's talk about these three exceptions. What are these three exceptions? So these are three exceptions. Okay. These are the three exceptions. In case of below asset, impairment testing is required irrespective of the indications of impairment. And friends, the impairment testing is mandatory on the above three assets at least once in a year. At least once in a year. At least once in a year. For example, the company has acquired an intangible asset with an indefinite useful life. Okay. And the company has done the impairment testing in the third quarter. The company is a listed company. They have done the impairment testing in the third quarter. So whether impairment testing in the fourth quarter is also required? Whether impairment testing in the fourth quarter is also required? If the company has done the impairment testing in the third quarter?
It is saying that it should be done once in a year. And we are not talking about a quarterly or any specific financial year ending period.
Yes. It says that the impairment testing is mandatory on the above three assets at least once in a year. At least once in a year. Okay. So in that case, if the company has done the impairment testing in Q3, in that case, Q4, it is not required. It is not mandatory. Right. But can the company do the impairment testing more than once in a year?
Yes.
Yes, it can do. But when? For example, if if there are impairment indicators are there, while I have told you on these three cases, on these three assets, you are not required to see the impairment indicator. आपको उसका वेट नहीं करना, आपको नहीं देखना. अगर ये तीन एसेट्स हैं तो मैंडेटरी इंपेयरमेंट टेस्टिंग करनी है, बट दैट मैंडेटरी रिक्वायरमेंट इज ओनली फॉर वंस इन अ ईयर. अगर इंपेयरमेंट इंडिकेटर एग्जिस्ट करता है ऑन दीज थ्री एसेट्स, you have to do for more than once in a year also. Okay, is that clear? Is that clear? So friends, the frequency and timing of impairment testing should be consistent on a year-on-year basis. Okay, for example, what is meant by frequency and timing of impairment testing should be consistent on a year-on-year basis? So let me talk about all these three assets. Intangible asset having indefinite life, intangible asset not yet available for use, and goodwill. Let's say financial year 2022 and 23 and FY 23-24. FY 23-24. Intangible asset having indefinite life. It in the last year, in 22-23, the impairment testing was done in Q3. So in this year, it has to be done in Q3 only. For example, this class of asset, intangible asset not yet available for use, the impairment testing was done on Q2. So in this year, it has to be done in Q2 also. Goodwill arising in business combination. This was done in Q4, in the month of March. This has to be done in the Q4 in this year also, right? So the frequency and timing of impairment testing should be consistent on a year-on-year basis. On a year-on-year basis, right? On a year-on-year basis. Now, third concept. In the notes, I have told you two concepts. Concept number one, impairment testing is mandatory on these three assets at least once in a year. Concept number two, the frequency and timing of impairment testing should be consistent on a year-on-year basis. Concept number three, what is concept number three? For example, the company has acquired an intangible asset with indefinite life in January 2024. Okay. The company is closing the books of accounts on 31st March 2024. Whether impairment testing is required in financial year 23-24, the company has acquired the intangible asset in January 2024. Tell me what should be the answer. Uppercase is saying yes. What about others? What about others? Nisha is saying yes. Yes, uppercase and Nisha, you both are right. But why? Because yes, the impairment testing is mandatory at least once in a financial year. Okay. So if a company has acquired an intangible asset in a year, okay, in that case, doesn't matter the company has purchased 2 or 3 months ago. You cannot say that. Since the company has purchased 2 months ago, impairment testing is not required. Answer is no. Okay. It is not 12 months from the purchase of asset. It is impairment testing is mandatory at least once in a financial year. Once in a financial year. So if the asset was purchased in the month of January, so impairment testing has to happen in the month of March itself. Again, I am repeating, you must be say that, sir, if the asset was purchased on 15th of March, will we do the impairment testing on 31st of March? Technically speaking, yes. But, so theoretically speaking, yes. But technically, will there be any impairment? 15 दिन पहले आपने एसेट खरीदा, मार्केट वैल्यू पे तो खरीदा होगा. आपको लगता है कुछ इम्पेयरमेंट आएगा उस पे? Until and unless 15 दिन के अंदर कोई नेगेटिव अनाउंसमेंट ना आ गई हो उस एसेट को लेके या उस इंडस्ट्री को लेके. करेक्ट? Correct? I hope it is clear to everyone. I hope it is clear to everyone. So friends, we discussed that we need to identify the asset which requires to be impaired. So basically we need to check the indicator of impairment. If it exists, we have to estimate the recoverable amount. On these three assets, we are not required to check the impairment indicator. we have to mandatory do this impairment exercise at least once in a year, right? And the timing and frequency has to be same, consistent. Okay. We discuss the internal and external indicators, right? Now, we will be talking more about the recoverable amount, while we have already covered the concept of recoverable amount, but we will be discussing more on this. So can we have a 10 minutes of break? It's 8:26 now. Let's have a 10 minutes of break and we will start at 8:36. Okay.
Sure.
Ashokji, break start. Yes. So students, while we understood and discussed recoverable amount, so recoverable amount is higher of fair value less cost to sell and value in use. Okay. So it talks about higher. Let's say the value of a car, the carrying value of a car is 9 lakh rupees. Okay. You went to the market and you check the fair value. The fair value of the car is 9.5 lakh rupees. Okay. So do you require to compute the value in use for the purpose of checking the impairment loss? Will you require the
Yes.
computation of value in use?
Yes, sir.
Again, I am repeating my question. The carrying value of the car is 9 lakh rupees. You have checked the market value. You have found that the market value, the fair value less cost to sell is 9.5 lakh rupees. My question is, in this situation, will you compute value in use or you will not compute value in use?
Not required because carrying amount is less.
Yes, not required. Why? Because you know that doesn't matter. Whatever is the value in use, the formula for the recoverable value is higher of value in use and fair value less cost to sell. Correct? My fair value less cost to sell is already higher than my carrying value. तो मुझे पता है कि मिनिमम 9.5 लाख का तो वैल्यू होगा ही होगा. करेक्ट. So if minimum 9.5 lakh value is there, in that case, it is beyond carrying value. So there is no impairment and hence it is not required to compute the value in use or vice versa. So friends, standard says that it is not necessary to compute either fair value or value in use if either of these exceeds the carrying value of the asset, because once you have computed one value and you found that the one value is higher than the carrying value, either it is fair value or it is a value in use, so it means the asset is not required to be impaired. Yes, Abhikesh.
Sir, while calculating recoverable amount, first criteria is fair value less cost to sell. Now, sir, this cost to sell is same as scrap value or it is a cost incurred for selling that scrapped asset?
It is not a scrap value.
Okay.
See, it is your fair value less cost to sell. Cost to sell is a incremental cost which will be required while selling the asset.
Okay.
Okay.
Thank you, sir.
So it is clear. So if you have computed one leg of fair value, one part of recoverable value, and you have found that this one part is already higher than the carrying value, then the other part calculation is not required. This is what standard says, and this is the mathematical answer, right? Even though if standard would not have said this, so this is the mathematical answer. Okay. Illustration number 1 of ICAI study material, the carrying value of a building in the books of Sun Limited as on 31st March 2021 is 300 lakhs, right? As on that date, the value in use is 250 lakhs and the fair value less cost to sell is 238 lakh. Calculate the recoverable amount. Tell me quickly, what is the recoverable amount?
250 lakh.
Value in use 250, fair value less cost to sell 238, higher of 250. And your carrying value is 300 lakhs. So what is the impairment loss?
50 lakh.
50 lakh is the impairment loss. Okay. 50 lakh is the impairment loss. Now let's discuss the meaning of fair value less cost to sell. What is the meaning of fair value? So I have already explained you. Fair value is more from the market perspective. It's an exit point of view. It's a market driven value, right? It's a market value. Okay. So the definition is given, not relevant. Cost of disposal. What is meant by cost of disposal? Cost of disposal is an incremental cost directly attributable to the disposal of an asset or cash generating unit, excluding finance cost and income tax expense. Excluding finance cost and income tax expense. Okay. So cost of disposal is a directly attributable cost. It's an incremental cost which is required to be incurred on selling the asset. Now, let me give you an example. And let me ask you whether it is a cost of disposal or it is not a cost of disposal. A company has a machinery, okay? And the company wanted to sell the machinery, okay? Or the company wants to check the impairment of machinery, and the company engaged a valuer, right? For the purpose of checking that what is the market value of this machinery? What is the market value of this machinery, right? And the company has given 1 lakh rupees as a valuation fees to the valuer. 1 lakh rupee as a valuation fees to the valuer. My question is whether this valuation fee is a directly incremental cost or not. Whether this valuation fee is a cost of disposal or not.
No, sir.
Anila is saying no, but why?
Sir, even I don't recoup him, I can sell it directly, no, sir. There's no need that I have to value before selling the asset. Maybe for the purpose of books, I am doing it.
Your answer is partially correct. You're right.
Sir, it's not necessary that after
Yes.
valuation I sell the
Yes,
asset.
yes,
So,
yes. You're right. Absolutely right. So it is not necessary. Once I got the valuation, probably my mind will get changed. Okay. So this valuation fee is not directly related to the cost of disposal, right? So this valuation fee is for my benefit. I want to know what is the value of this asset, but this valuation fee does not entitle me and does not obligated me to sell the asset. Okay. So it is not a directly attributable cost. It is not an incremental cost directly relating to the disposal of an asset. Second example, the company will incur stamp duty as a transfer charges. The company is selling a flat and the company has to pay the transfer charges as a stamp duty while selling the flat. Whether stamp duty is a directly attributable cost, it's a cost of disposal.
Yes, sir.
Yes,
sure.
sir.
If the sale will not happen, the stamp duty will not be required. Okay. The company is selling its plant. Plant means factory. Okay. And the plant requires, for sale of the plant, the company needs to dismantle the plant and need to packaging it. The company need to dismantle and need to package this plant so that it will come to the sellable condition. Okay. Whether this dismantle cost and packaging cost for selling this plant is a cost of disposal.
Yes,
Yes,
sir.
sir.
Yes, it is a cost of disposal. So legal cost, stamp duty, similar transaction taxes, cost of removing the asset, directly incremental cost to bring an asset into a condition for its sale, just like an inventory. Okay. Directly incremental cost to bring an asset into condition for its sale. Whether that valuation report was a cost which is bringing an asset into the condition for its sale? Answer is no. Answer is no. Okay. So let's discuss one of the example from ICAI study material. So let me take you guys on the ICAI study material and please confirm once the study material is visible. Is it visible?
Yes, sir.
Illustration number 1 we have already covered. Illustration number 1 we have covered just now. Illustration number 2. So this fair value less cost to sell example I am looking at. So not to worry, it is there in my PPT is it is there. So let's cover it from my PPT. My PPT is visible now. Is my PPT visible now? ABC Limited owns a bottling plant located in one of its factory. The professional valuers have estimated that the current market value of plant is rupees 10 lakhs. The valuation fee was rupees 1 lakh. ABC need to dismantle the plant and deliver it to the buyer. Dismantling cost rupees 2 lakhs. A specialized packaging cost would be 1 lakh and the legal fees would be 2.5 lakh. Determine its fair value less cost of disposal. I am giving you 30 seconds. Please answer this question. Determine its fair value less cost of disposal. $3.5 lakh, 6.5 lakh,
6.5.
6.5 lakh. My PPT is visible to everyone. One of the students saying it is not visible.
Sir, it's visible to me.
Okay. If it is visible to you, it means it is visible. Hemant is saying 6.5. Most of you are saying 6.5 lakh is the right answer, correct? Yes, this is the right answer. Sales price minus dismantling cost minus packaging cost minus legal fees, right? This is the fair value less cost to sell. What I have not included? I have not included this valuation fee because valuation fee is a sunk cost, right? This is required for the purpose of decision making. This is not directly incremental cost, which will be required when you decided to sell the asset, right? So this cost has been incurred for taking a decision. Okay, this cost is not directly associated with the sale of the asset. Okay, for example, this dismantling cost of removing the asset, it is the cost which is necessary for bringing the asset into the sale condition. Dismantling cost, again, you will dismantle when you have decided to sell the asset. Specialized packaging cost, legal fee. So these all are the costs which have been incurred once you took the decision to sell the asset. Okay. These costs are required to be incurred for the purpose of taking it back to the condition of sale, right? Sumit, it is 6.5 lakh, not 5.5 lakh. Okay. Clear? Friends, coming to the value in use. So we have understood that what is value in use? Value in use is the present value of future cash flow expected to be derived from the asset or a group of asset or a cash generating unit, correct? So whenever you have to compute the value in use, you have to do two things. Number one, first you have to check the future cash flow. Second, you have to get the discount rate, right? First, you need to estimate the future cash flow. The second, you need to estimate the discount rate. Okay. So standard says that you need to estimate the future cash flows, and standard has given you some guidance. So I'm just explaining you those guidances, not much relevant from the examination perspective, but you need to aware those guidances because it will help you to pick those cash flows. Okay. Standard says that while estimating the future cash flows, you need to estimate the future cash flow the entity expect to derive from the asset. Okay. Why? Because you have to check the impairment testing of that particular asset. Let's say the company has a truck and company is checking the impairment testing of the truck. Company is doing the impairment testing of the truck. So company has to take the estimate of the future cash flows of the truck only. उस truck का estimate क्या है future cash flows का, not for the other fleet. Okay. So दूसरे किसी asset का future cash flow नहीं देखना, उस truck का cash flow देखना है. Expectation about possible variations in the amount or timing of those future cash flows. The company has to estimate, right? What could be the possible variation in the future regarding the cash flows, right? What are the amount of the cash flows which is arise in the future and what will be the timing of the cash flows? Why timing of the cash flow is relevant? Why timing of the cash flow is relevant?
Present value
चाहिए.
is
Present
time.
value. Yes.
Time.
Present value is depending on time. If your cash flow will reach to you after 2 years, the present value will be lower in comparison to the cash flow which will reach you to after 1 year. Correct? So the closer the cash flow, the present value is higher. Time value of money is important, and other factors, right? For example, if you are expecting the future cash flows from the other assets, you need to see the future cash flow from the market perspective, that how the other market participants are also behaving in terms of getting the future cash flows. Okay. So to cut a long story short, as a student, you need to estimate the future cash flows only from the underlying asset which is subject to impairment. मतलब जिसकी आप impairment testing कर रहे हो. The question in the exam may confuse you. The question may ask you the impairment of asset A1, but he will give you the cash flow of asset A1 and A2 both. So please pick the cash flow of asset A1 only for the purpose of calculating the value in use. Okay. This is what the entire story is. Okay. So in this slide, that was the only relevant aspect. Friends, while estimating the future cash flows, standard says that you should have a reasonable and supportable assumption of management best estimate of the economic condition over the remaining useful life of the asset, right? When you are estimating the future cash flows, you have to first estimate the economic life of the asset. वो तो आप करोगे ही ना, नहीं तो depreciation कैसे charge करोगे? So for example, the economic life of the asset is 10 years. Economic life of the asset is 10 years. Okay. You need to check what are the cash flows over the economic life of the asset. Okay. You should have a reasonable and supportable assumption of the management best estimate. Why management is estimating that we will be able to receive higher cash flows in the future years? Why management is expecting? Okay. So there must be a reasonable and supportable assumption of management best estimate of the economic condition over the remaining life of the asset. Greater weight should be given to the external evidence. For example, there is a report, there is an industry report by some market experts, some economists, that, by 2025 or by 2030, for example, the consumption of the products which is manufactured by this machinery will go up. Okay. And hence the company is expecting that there is a market research report which says that the consumption will grow 5 times of the product which is manufactured from that particular machinery. And the company has also estimated the 5 times cash flows in the future years from the sale of that product, right? So greater weight should be given to the external evidence. You need to refer most recent financial budget or forecast that has been approved by the management. Friends, when you will reach to your professional life after becoming a chartered accountant, and probably in your articleship days, you have seen, if you have done the audit of a big listed companies, every company has some AOP, annual operating plan. Every company has some budgets, forecast, which is approved by the management, right? So the company needs to refer the most recent financial budget or forecast that has been approved by the management. And while projecting, the projection should cover a maximum period of 5 years until and unless a longer period can be justified. Friends, standard talks about for taking a estimated cash flow for a period of 5 years. But let's say if I talk about the aviation industry, right? The life of the aircraft is 20 years. If I talk about the tower industry, telecom industry, the life of the tower is 20 to 25 years. So whether taking a projection for 5 years would be relevant, probably if I will compute the 5-year cash flow, then my 5-year present cash flow, present value is much lower than the carrying value. तब तो फिर मेरे सारे के सारे एयरलाइन इंडस्ट्री में सारे के सारे एयरक्राफ्ट ही इंपेयर हो जाएंगे. टावर इंडस्ट्री में ऑल द टावर्स विल गेट impaired. Correct? Correct. So friends, standard says that the projection should cover a maximum period of 5 years, but you can take a longer period, okay, if it can be justified. Okay. Cash flows includes. Now, what would be the inclusions in those cash flows? What are the inclusions? Standard says that cash flow should be estimated for assets in their current condition. In their current condition. Okay. What does it mean? Let's say there is a transport company. This transport company has 100 cars, 100 fleet of cars. This transport company is expecting that my future cash flow will be XYZ, for example. So what happens? This transport company is right now, they have engaged 100 drivers because they have 100 cars, they have 100 drivers. They are paying salary to the drivers. For example, 50,000 rupees salary is for each driver they are paying. Okay. So 50,000 multiplied by 100. What is the cost? 100,000. 50 lakh rupees is the monthly salary they are paying to the drivers. Okay. But when they are estimating cash flow, what they are expecting? They are expecting that my cash flow will be much higher. When I'm talking about cash flow, so cash flow means net cash flows. Inflow minus outflow. It means net cash flow. Okay. So they are expecting that right now we are paying 50 lakh rupees salary to the drivers. And what happened after 5 years, the new technology is coming, which is driverless cars. So we will use that technology, and after 5 years, we will be able to save the driver salary cost. And they are not expecting this cost as an outflow. They are not expecting this cost as an outflow while estimating the future cash. Right? So whether it is right to say that we will bring the driverless cars, this technology will come and we will be able to save the cost of driver, and hence I'm not including this outflow in my current estimate. Am I
No,
right?
sir, because
No, sir.
Why no?
Because the way we
for
are
the
using that asset, we have to use that conditions also.
Yes, because the standard says that whenever you are estimating the asset, the standard is asking what you are checking for impairment. You are checking the recoverable value of your existing asset, correct? Not the future asset, existing asset. The way your existing asset is running, the way you are operating your existing asset, the way you are using your existing asset, right? And hence standard says that whenever you have to estimate the cash flow, you have to estimate the cash flow in the current condition, not in the future condition. You have to estimate the cash flow in the current condition. What is my inflow? What is my outflow? Okay. So it talks about that whenever you have to take the cash flow, cash inflow from the continuing use of the asset and cash outflow that are necessarily incurred to generate the cash inflow from continuing use of the asset. So you have to take the cash inflow and cash outflow, both. Okay, both. Net cash flows, if any, net cash flows. Net cash flows, if any, to be received or paid for the disposal of the asset at the end of its useful life. What does it mean? Terminal cash flow. Have you heard the concept of terminal cash flow in your SFM? Terminal cash flow, scrap value, residual value.
Yes, sir.
So if you expect that, okay, the remaining life of the car is, let's say, 10 years. So let me give you the example. Let me give you all these 4 condition, all these 4 aspects in this example. Anila is working in a chartered accountancy firm as an article. Her principal has sent her to audit one of his travel agency client, one of its transporter client. The transporter client has 100 cars, 100 fleet of cars. Okay. And currently the transport industry is not doing well. Currently, the government has increased a lot of taxes. The government has done a lot of restrictions. And currently the transport industry is struggling a lot. So when Anila went to that transport industry client, Anila has asked that Mr. XYZ, have you done the impairment testing of your assets? He told that, Madam, what is impairment testing? Then Anila briefed that impairment testing means you have to check whether your current carrying value, whether your carrying value in the balance sheet is sufficient, is appropriate that you will be able to receive such amount in the future. I mean to say, whether your carrying value reflect the right picture of the recoverable value also. Whatever you are showing in the balance sheet, is it recoverable? Then the client is saying, Madam, what is meant by recoverable? Then Anila has told that, your industry is facing a lot of issues, lot of struggles. So there is an external indicator that you have to check the recoverable value. You have to do the impairment testing, impairment exercise. You have to check what is the fair value. He told that, Madam, how can I check the fair value? Because I don't want to sell the asset. Can I compute the value in use? Then Anila told, okay, compute the value in use also. So while computing the value in use, tell me what is the money which you are earning from your 100 cars. He told that every day I'm able to earn 1,000 rupees from this car, let's say, or 2,000 rupees from this car. Okay. So what is per car revenue? So per car revenue is for probably 60,000 rupees in a month. Okay. So this is what you are earning and what you are paying. So he told that I'm paying driver salary, I'm paying toll, parking, fuel, etc., etc. She told, okay. So plot your cash flows, your inflow and outflow on your Excel file. Okay. And expect that what is your future cash flows. So then he told, Madam, how can I compute the future cash flows? So then Anila told, the cars which you're operating in the current condition, okay, what is the remaining life of these cars? He told 10 years is the remaining life. Then Anila told that estimate what are the cash flows you will receive and outflow which you will pay in the next 10 years. Okay, estimate that amount in the current condition, in the current running condition of this car, not in the future condition. That future you will do XYZ, you will bring new technology, right? And then your cost saving will start, not like that. So estimate your inflow and outflow in the current condition for the future. And after 10 years, you will get some residual value of your car also by selling it into the scrap. Okay. So also use the terminal cash flows while computing the recoverable value. So these are the cash flows you need to take into account for the purpose of computation of value in use. Okay. Sumit is asking, sir, if impairment testing is done during the year, then proportionate depreciation up to that period has to be taken to arrive at its carrying value in the books. You are absolutely right, Sumit. Okay. So these are the cash flows. Cash flow does not include future restructuring to which an entity is not yet committed. If the company is saying we will do future restructuring, we will reduce, we'll do some automation and reduce the number of staff, and we will be able to save the salary. So these future restructuring are not required and not allowed to be taken into consideration as a cash flow savings. Improving or enhancing the asset performance. So the company is saying that, in future, my asset performance will be enhanced and I will be able to receive more cash flows, or I will be able to save the outflows. So this is not required to be taken into consideration while estimating the cash flows. Cash inflow or outflow from financing activity. The company is telling that in future, I will be able to take the loan on these assets. So this financing activity cash flow is also not included in the cash flow estimation. Income tax receipts or payments. So the income tax angle is also not required to be included in the cash flows. Okay. So friends, for value in use, you have to estimate the cash flow and you have to estimate the discount rate, because value in use is the present value of the future cash flows. And number two, while computing the future cash flow, you have to compute the cash flow on the basis of recent forecast. First of all, you have to take the cash flows only relating to that asset which is subject to impairment exercise, subject to impairment testing. Number two, you have a reasonable and supportable assumption of the best estimate of the cash flows. Greater value should be given to the external evidence. You have to use the most recent budget or forecast, and your projection should be for a maximum period of 5 years, until and unless the longer period can be justified. In your examination question, if the question will say that the economic life of the asset is 10 years, right? and the present and the future cash flows over a period of 10 years is this. 10-year cash flow is given and the life is 10 year also given, right? So don't take the cash flow for 5 year in that case only, because probably when you take the cash flow for 5 years, probably the impairment may be there. Okay, but you need to write this fact that in as per Ind AS 36, the projection has to be covered for a maximum period of 1 year, maximum period of 5 year, but a longer period can be taken if it is justified. In this case, the economic life of the asset is 10 years, and considering the cash flow is also given for the 10 years, so we are assuming that the entity will be able to receive the cash flow for the next 10 years, and hence we are computing the present value of the cash flows for the next 10 years, right? For the purpose of computing the value in use. Okay. Fine. Then your cash flow should include the cash flow in the current condition, and it has to be from the inflow from the use of the asset, and outflow, which is important for generating those inflows, and terminal cash flow is also required to be taken into consideration. Your future restructuring cash flow is not required to be taken into consideration. Improving or enhancing the asset performance cash flow impact should not be taken. Cash flow from financing activity or income tax payments or receipts are not required to be taken into consideration. Okay. Discount rate. What is the discount rate? Your discount rate should be the pre-tax rate. Okay. Discount rate should be the pre-tax rate. What is meant by pre-tax rate? For example, your discount rate is an interest rate. For example, 10% is the interest rate. Okay. So you remember, if you guys must have heard about that taking a loan is beneficial to the interest, taking a loan is beneficial to the taxpayer companies. लोन लेना टैक्स पेइंग कंपनीज के लिए अच्छा क्यों है?
Tax saving on interest expense.
Tax saving on the interest expenses. Very good. For example, the company got a deal and the company got a funds at the rate of 8%. Whether 8% is a cost to the company? Answer is no. For example,
8% minus tax.
Yes, 8% minus tax. For example, if a company which is earning 100 crores, assuming that all the expenses are netted off from this 100 crores, the company has to pay a tax of 25 crore on 100 crore, assuming a tax rate of 25%. The company has taken a loan of rupees 500 crores at the rate of 8%. What is the interest? 500 multiplied by 8%, 40 crores. 40 crore for the first year. So the company got the funds to expand the business, to grow in the business. The company got a funds of 500 crores. And the company is expecting the funds which the company has infused, the company is expecting the inflow because the company will expand and the company will be able to generate more revenue in future. Okay. So the company will be able to get a return of, let's say, 20 or 30% by deploying those funds in the business. And what is the cost to the company? On this 40 crore, earlier the company was paying a tax on 100 crores. Now the company will pay a tax on 60 crores. Means straight away, the company got a tax saving benefit of 2% on this loan interest. So what is my post-tax rate? What is my post-tax discount rate? My post-tax discount rate is 8% minus 25% of 8%, which is 6%. Right? My post-tax rate is 6% on that loan. What is my pre-tax rate? What is my pre-tax rate? My pre-tax rate is 8%. So standard says that you have to take a pre-tax rate, right? Your discount rate should be pre-tax rate. Your discount rate should be pre-tax rate. Okay. And now what is the discount rate? Standard says that the discount rate should be specific to that asset. For example, your remaining life of the asset is 10 years. The cost is, let's say, 100 crores. So what is the rate of interest on a loan for a period of 10 years? If this company will go to the bank and ask for 100 crore rupees of loan for a period of 10 years, what should be the interest rate, right? So this discount rate should reflect the interest rate specific to that asset. Okay. And standard says that while computing the discount rate, the entity has to first apply the entity's weighted average cost of capital, right? If in the question, the weighted average cost of capital will be given, you have to use that weighted average cost of capital as a discount rate. If weighted average cost of capital is not given, then the company needs to check the incremental borrowing rate. Incremental borrowing rate. That what is the rate? What is the rate on what is the interest on the loan? If the company will go to the bank and take the loan, what is the interest rate on that? Right? And the other market borrowing rates. Other market borrowing rates is, for example, uh, GSEC, government securities rate or some other rate. Okay. So friends, in the question, this discount rate will always be given to you as a theory. The discount rate could be, the first priority will be given to the weighted average cost of capital, then the incremental borrowing rate, and the last one is other market borrowing rates. Okay. But don't to worry, not to worry, this discount rate will always be given in the question. Okay. Right? Is that clear? So we talked about the, yes, we talked about the future cash flows and we talked about the discount rate, right? Just to cut a long story short, the cash flows will be given in the question, but please remember, you have to take the cash flows only in the existing condition of the asset, not in the future condition of the asset. Number two, while taking a cash flow, you have to take a net cash flow, means inflow as well as outflow. Inflow as well as outflow. Okay. Third, you need to take a discount rate, which is more of an interest rate, and probably the question will confuse you. The question will say that, the discount rate is an interest rate is a 10%, and the net interest rate is 7.5%, which is 25% is a tax saving on the interest. So don't get confused, and you have to take the normal interest rate, pre-tax rate, which is 10% in this case. Okay. Friends, one of the important concept and one of the important aspect, let me take with all of you, which is value in use in case of foreign currency future cash flows. Foreign currency future cash flows. For example, you are an Indian company. You have a hotel in London. You have a hotel in London. So if you are an Indian company and you have a hotel in London, so what is the nature of this hotel in the books of this Indian company? What is the
PP.
nature of this hotel building in the books of Indian company?
PP.
PP, property, plant and equipment, Ind AS 16. Okay. This hotel building is located outside India. It means this hotel building cost is in pound or euro, in foreign currency, correct? हमने foreign currency में खरीदा होगा ना? Okay. So now we have converted this foreign currency into the functional currency, or into the, I would say, Indian rupee, Indian currency, for the purpose of presenting it in the books of accounts, correct? So Pooja is the auditor of this company, and Pooja told that, nowadays London market is not doing well. You have to do the impairment testing of your London hotel. So then accountant is asking Pooja, how can I do the impairment testing of this hotel building which is located in London? Pooja told that please compute your value in use. Okay. Because fair value you can get from the valuer, but you need to compute the value in use also. So then accountant told, how can I compute the value in use? Then Pooja is giving some steps. Pooja is telling him that estimate future cash flow in the currency in which they will be generated. You will generate your cash flow. You will receive your cash flow. You will pay your cash flow in euro or in pound, correct? So not to worry, estimate in the foreign currency only. So the accountant is saying, madam, I will be able to run this hotel, and this hotel has an economic life of, let's say, 15 years. And in the next 15 years, I have estimated that, these are the amounts which this company will be able to receive as a cash flow in pounds. And this is the amount which the company has to pay in pounds. Okay. Then once you have arrived at cash flows, now you need to discount those cash flows. Okay. Friends, since you will be getting the cash flows in London, okay? And every country has a different interest rate. Every country has a different interest rate, right? Are you aware the rate of interest in India is, for example, if you want to take a home loan in India, the rate of interest is, for example, 10%, 9 to 10%. But if you have to take a home loan in Dubai, Middle East, or in USA or London, the rate of interest is probably 3 to 4% maximum, right? So if the cash flows are in foreign currency and these cash flows are generating in a country which is London, so which country interest rate needs to be applicable? Whether we should, for the discounting and for the arriving at the present value of this foreign currency future cash flows, which discount rate should I apply? The discount rate which is relating to India or the discount rate which is relating to London?
London.
London rate.
London. And even though when I was explaining the concept of discount rate, what I have told, the discount rate is that interest rate which is specific to that asset. So where that asset is located in London, right? So standard says that if you have a foreign currency cash flows, take the discount rate, take the interest rate relating to the foreign currency cash flows, right? And then translate the present value using the spot exchange rate. But your number is in INR. You are maintaining the books of accounts in INR. So you have estimated the foreign currency cash flow. You have converted you have also computed you have also concluded the discount rate in the foreign currency. Then you have arrived at a present value of the foreign currency cash flow. Now you have a present value in the foreign currency. Now you have to convert this present value into the INR. So how will you convert this present value in INR? This foreign currency present value in INR present value? By using the spot rate. By using the spot rate on the reporting date, right? जिस दिन पे आप impairment testing कर रहे हो. So let's discuss this concept with the help of this example. This question from ICAI study material. This question from ICAI study material. Okay. So let me take you to the study material and discuss this example. Just a minute. Let me find out this example. It is in test your knowledge, I believe. Just allow me a minute.
Sir, I think
Yes.
it's question number 7.
Yes. Question number 7. Yes. Yes, this is question number 7, which is there on the screen, right? On 31st March 2001, XYZ Limited makes following estimate of cash flow for one of its assets located in USA. The cash flow is given in foreign currency. On 31st March 2001, see how I am reading this question. On 31st March 2001, XYZ Limited makes following estimate of cash flows for one of its assets located in USA. Year 1, 2, 2, 3, 3, 4. The future cash flow is given. Cash flows 80, 100 and 20. Following information have been provided. Applicable discount rate for India is 15%, for USA 10%. Oh, so the cash flow is in foreign currency. This asset is in USA. It means I have to apply the discount rate of USA. Okay. Exchange rate are as follows: 31st March 2001, 2002, 3, 4, 45, 48, 51, 55. It is also estimated. These are the exchange rates. So I have to use the exchange rate on 31st March 2001. Okay. Let's go step by step. Step number 1. What is my step number 1? Step number 1 is estimate the foreign currency cash flows. So what is my foreign currency cash flows? 80, 100, 20. So let me solve this question on the Excel file. I hope the Excel file is visible to everyone. Is it visible to everyone, Excel file?
Yes, sir.
It is visible. Okay. right? So we are talking about the value in use calculation in case of foreign currency cash flows. In case of foreign currency cash flows. So we'll apply 4 steps. Step number 1, calculate the future cash flows in the foreign currency only. Estimate the discount rate applicable to the foreign currency. Calculate value in use in the foreign currency. Then once value in use will be calculated in the foreign currency, then you need to convert the value in use into the Indian currency using the spot rate. So this is question number 7. Question number 7 of ICAI study material from Test Your Knowledge. Okay. Solution. Step number 1. What is my step number 1? Compute the cash flows. These cash flows are given. These cash flows are given. Step 1. Cash flows. Foreign currency cash flows. FCCF. Foreign currency cash flows. Okay. Foreign currency cash flows. So these are the years 2001 to 2002, 3, 2003, 4. Okay. These 3 years are given in the question, I believe. These 3 years are given 80, 120. 80, 120. This is in USD. $80, $100, and how much? $20. The total foreign currency cash flow is $200. Step number 1 is estimate the future, calculate the future cash flow in foreign currency. Estimate the discount rate applicable to the foreign currency. Step number 2, present value factor. Present value factor at the rate of 15% or 10%. इंडिया का रेट लें या यूएस का रेट लें?
10%.
10% यूएस का रेट. 1 divide by 1.1 divide by 1.1, so divide by 1.1 and again divide by 1.1. Step number 3. What is my step number 3? Compute the present value in the foreign currency. PV in foreign currency. In foreign currency, okay. What is my PV in foreign currency? My total present value of future cash flow is how much? My total present value of future cash flow is $170 US. 170 US. Okay. I hope this calculation is clear to everyone. Simple calculation. I have done nothing. जैसे मैं INR में प्रेजेंट वैल्यू निकालता था, यूएस डॉलर में प्रेजेंट वैल्यू निकाल दी मैंने, एंड यूएस डॉलर के लिए मैंने यूएस डॉलर का रेट ले लिया. करेक्ट. नाउ व्हाट इज माय स्टेप नंबर 4? What is my step number 4? Convert this USD present value into INR present value. Okay. So I need to apply the exchange rate. What is the exchange rate? What is the exchange rate on which date? ये कब का है? ये 170 US dollar present value कब की है? This is on
45 rupees.
31st March 2001. So on 31st March 2001, what is my exchange rate? It
45.
is 45 rupees. 45 rupees per US dollar. Right. So what is my present value? This is my present value. This is my PV. This is my PV in USD. Right. This is my present value in USD. What is my present value in INR? What is my present value in INR? कैसे निकालूं? 170 multiply by 45. This is your PV in INR. This is how you will solve the questions in case of foreign currency future cash flow. In case of foreign currency cash flows are there. This is how you will compute the value in use in case of foreign currency cash flows. Foreign currency assets के केस में आप कैसे निकालते हो value in use? You have to compute the value in use in this way. Simple. You have to compute the cash flows in foreign currency. You have to apply the discount rate in foreign currency. You have to compute the value in use in foreign currency. So once value in use will be calculated in foreign currency, convert into the INR using the spot rate on the first date. सर पहले कन्वर्जन नहीं कर सकते, आंसर इज नो। इफ यू विल कन्वर्ट द फर्स्ट, इन दैट केस व्हाट विल हैपन, क्या होगा? आप 80 को करोगे 2002 के रेट पे, 100 को करोगे 3 के रेट पे, और 20 को करोगे 4 के रेट पे, विच विल नॉट रिफ्लेक्ट अ करेक्ट पिक्चर, राइट? आपका एसेट्स फॉरेन करेंसी में है, योर एसेट इज इन फॉरेन करेंसी, योर फ्यूचर कैश फ्लोज इन फॉरेन करेंसी, कंप्यूट योर प्रेजेंट वैल्यू इन फॉरेन करेंसी। जैसे आप आईएनआर का निकालते हो, सिंपल। Once your present value is computed in foreign currency, convert it into INR using the rate on the reporting date, which is 31st March 2001, क्योंकि आप इस दिन की वैल्यू को कंपेयर कर रहे हो। करेक्ट? करेक्ट? Any challenge, any question, any problem?
No.
Friends, now I will discuss one of the important question from ICAI study material, which will give you the entire perspective of recoverable value, fair value, impairment loss, revised depreciation, everything. Okay. So let me take you to the illustration number 3. And probably I will be concluding the session today by 9:45. Is that okay with you guys?
Yes, sir.
So who have joined late, so student, I am not feeling well today. And hence I have, switch off my video. So let's go to illustration number 3. I'm just opening illustration number 3. Yes, a very good illustration, a very important illustration. Illustration number 3. I believe this illustration is there on the screen.
Yes.
Okay. Mars Limited gives the following estimate of cash flows relating to the PPE on 31st March 2004. The discount rate is 15%. See how I am reading this question, right? How I'm reading this question. Just allow me 30 seconds. Yes. Mars Limited give the following estimate of cash flows relating to PPE on 31st March 2004. Discount rate is 15%. This discount rate is given. What is the use of this discount rate? The use is for the purpose of computing the present value, correct? For the purpose of computing the present value, right? The cash flow is given 2004, 5, 5, 6, 6, 7, 7, 8, 8, 9, and the residual value as at 31st March 2009, 500. So cash flows are given for the 5 years, and the terminal cash flow is also given. 500 is the residual value. Property, plant and equipment was purchased on 1st April 2001 for 20,000 lakhs. Okay. Useful life was 8 years. It was purchased on 1st April 2001, and we are talking about 31st March 2004. We are talking about 31st March 2004. And this asset was purchased on 1st April 2001 for rupees 20,000 lakhs. The cash flows are given for next 5 years because 3 years have already gone. The cash flows are given for the next 5 years, and we have to compute the carrying value of this asset on 31st March 2004, right? So that when we have this recoverable value, I mean to say value in use and fair value, we will be able to compute this recoverable value with the fair value, with the carrying value. Okay, so the carrying value on 31st March 2004 is not given, but the original cost is given, which was spent 3 years ago, and the total life of the asset is also given. Okay, and in this question, the cash flows for the next 5 years and the residual value at the end of the life of the asset is also given. Can I compute carrying value? Can I compute carrying values on 31st March 2004?
Yes.
How can I compute the carrying value?
By deducting depreciation for 3 years from 20,000 lakhs rupees.
Okay. Can anyone else let me know what is the carrying value in this case? Any other student? Sumit is saying reduce residual value. So if I have purchased an asset for 100 rupees and 10 rupees the residual value, scrap value, and the life is 10 years, what is my per annum depreciation? What is my depreciable amount? My depreciable amount is cost minus residual value, 100 minus 10. 90 is my depreciable amount. I have to depreciate this 90 over a period of 10 years. So I have to depreciate 9 rupees every year. I have to depreciate 9 rupees every year. Okay. So in this case, what is the cost? 20,000 lakhs. What is the residual value? 500. So 20,000 minus 500 divided by 8. This will give you per annum depreciation. Okay. So you have to depreciate 19,500 over a period of 8 years. So 19,500 divided by 8 divide by 8 multiply by 3, because 3 years has already gone. 3 years has already gone, right? So 19,500 divided by 8 multiply by 3 will give you the accumulated depreciation for 3 years. Okay. And when you reduce 20,000 minus 20,000 minus accumulated depreciation, it will give you the carrying value. Okay. Okay. So we'll solve this question, not to worry. Then the question will say that the residual value estimated at the end of 8 years. Okay, the question has given this residual value. The residual value estimated at the end of 8 years is 500 lakhs. Fair value less cost of disposal is also given in the question, 10,000 lakhs. Calculate impairment loss, if any, on the PPE. Also calculate the revised carrying value and revised depreciation of PPE. Whether question is clear to everyone? Whether question is clear to everyone? क्वेश्चन क्लियर है या नहीं है? इस क्वेश्चन में रिवाइज कैरिंग वैल्यू मांगी है, इस क्वेश्चन में इंपेयरमेंट लॉस मांगा है, इस क्वेश्चन में रिवाइज डेप्रिसिएशन भी मांगा है. ओके, सो मेनी थिंग्स हैव बीन आस्क्ड इन दिस क्वेश्चन. वुड यू लाइक टू solve this question? Would you like me to solve this question on Excel? Shall I solve this question on Excel? Okay, let me solve this question on Excel. Illustration number 3. I hope the Excel is visible. Illustration 3 of ICAI study material. The cost of PP is given in this question, 20,000 lakhs. 20,000 lakhs. Life, 8 years. 8 years. Purchase date, 1st April 2001. Residual value, which is also given in the question, 500 lakhs. Carrying value as on 31st March 2004. I need to compute the carrying value as on 31st March 2004. So what is my cost? What is my cost of PP? मैंने कितने पे खरीदा है? मैंने PP खरीदा कितने पे? Cost of PP is 20,000 lakhs less accumulated depreciation for 3 years. ये 3 years कैसे आया? ये 3 year कैसे आया? 1st April 2001 to 31st March 2004. What is my depreciation for 3 years? What is my depreciation for 3 years? 20,000. So my depreciation for 3 years is 20,000 minus 500 divide by 8. Okay. Multiply by 3. Divide by 8. Multiply by 3. Multiply by 3. Divide by 8. Multiply by 3. Okay. 7312 lakhs. 7312 lakhs. So what is my carrying value? The impairment loss is not there in the question on 31st March 2004. So impairment loss I need to compute. So first I need to compute the carrying value. Carrying value after depreciation. I need to compute the carrying value after depreciation. Is that clear? I hope this is clear to everyone. आपको यहाँ
Yes,
पर
sir.
गलती क्या करते हैं स्टूडेंट? Let me tell you. The student will reduce the 7312 from 19,500. Lot of times I have seen student make a mistake. What he will do? He will reduce this 7312 from 19,500. 19,500 से नहीं करना, 20,000 से करना है. कॉस्ट इज 20,000. वो 500 तो एस्टिमेट है रेसिडुअल वैल्यू का. आपने खरीदा तो 20,000 में, 19,500 में नहीं खरीदा. इज दैट क्लियर?
Yes, sir.
Yeah. Sumit, I know that many students have done this mistake, right? So your cost is 20,000, not 19,500. Then I have arrived at carrying value. The fair value less cost to sell is given in the question. The fair value less cost to sell is given in the question. Fair value less cost to sell. What is my fair value less cost to sell which is given in the question? The fair value less cost to sell is 10,000 lakhs. It is 10,000 lakhs. It is 10,000 lakhs. Fair value less cost to sell is 10,000 lakhs. Okay, so now I need to compute value in use. In this question, discount rate was also given now. What was the discount rate?
15%.
15% was the discount rate given in the question. So what I need to do now? Fair value भी पता लग गई, carrying value भी पता लग गया. I need to compute value in use, right? So computation of value in use. Year. What are the years? 2004, 5, 5, 6, 6, 7, 7, 8, 8, 9. 2004, 5, 2005, 6, 2006, 7, 2007, 8, 2008, 9, and again 2008, 9. Why? Terminal cash flow. So now cash flow. So in the first 5 years, the regular continued cash flow was, the continued cash flow was 2,000, 3,000, 3,000, 4,000, 2,000. 2,000 lakhs, 3,000 lakhs, 3,000 lakhs, and 4,000 and 2,000 lakhs. इसमें एक टर्मिनल कैश फ्लो भी दिया है ना, 500 की रेसिडुअल वैल्यू एंड में दिया है ना. प्रेजेंट वैल्यू फैक्टर is 1 divided by 1.15 divided by 1.15. ये भी सेम पीरियड है, so this will be of course the same amount. Then present value, this multiply by this. So my total cash flows are how much? My total cash flow in the next 5 years is 14,500 lakhs. But my present value, what is my present value? It is 9,510 lakhs. My present value is 9,510 lakh. So what is my value in use? My value in use is how much? 9510.06 lakhs. Okay, 9510. Any doubt on the calculation of value in use? Pretty simple. ये तो आप बहुत टाइम से कर रहे हैं वैल्यू इन यूज की कैलकुलेशन. Okay, you're doing this calculation since a long time. So now I have my carrying value, I have fair value less cost to sell, and I have value in use also. Value in use. What is the value in use? The value in use is 9510 lakhs. What is my recoverable value now? What is my recoverable value?
10,000 lakhs.
Recoverable value. Higher of value in use and fair value less cost to sell. My recoverable value will be higher of these two numbers. Recoverable value. Higher of fair value less cost to sell and sorry, higher of fair value less cost to sell and VIU, value in use, and VIU. So what is that? That is 10,000 lakhs. What is the impairment loss? What is the impairment loss?
2,688 lakhs.
12,688 minus 10,000. 2,688. 2,688. What is my depreciation? What is my depreciation? Revised depreciation. What is my revised depreciation? रिवाइज डेप्रिसिएशन कैसे होगा? यू रिमेम्बर मैंने बताया था ना, जो भी आपकी क्लोजिंग डब्ल्यूडीवी होगी आपको उसको रिमेनिंग लाइफ में करना है. रिवाइज डेप्रिसिएशन, your WDV, your carrying value is 10,000. Your carrying value is 10,000, right? 10,000 minus your residual value is 500. भाई 10,000 तो आज की वैल्यू है, बट 500 आपको मिलेंगे भी ना बाद में. डेप्रिसिएबल अमाउंट कैसे निकालते हैं? कॉस्ट माइनस रेसिडुअल वैल्यू करते हैं ना. हैव यू फॉरगॉट द बेसिक कॉन्सेप्ट? 10,000 minus 500 divide by 5. 1,900 is your revised depreciation, not 10,000 divided by 5. 1,900 divided by 5. Okay, 1,900 divided by 5. Sorry, 9,500 divided by 5. Okay, so closing WDV at the end of 2005, 2004-5. क्या हो गई closing WDV? 10,000 minus this 10. So your after impairment loss, your closing WDV, your carrying value asset 31st March 2004 is what? Is 10,000. Okay, and your closing WDV at the end of 31st March 2005 is 8,100. Right? I hope with this question, lot of concepts have been cleared. With this question, lot of concepts must have been cleared. Like your carrying value, not 20,000 minus 500, not 19,500 minus depreciation. It is 20,000 minus depreciation. Okay. Okay. Is that clear?
Yes, sir.
Okay, very good. So students, it's 9:45 now. So shall I call out the day? Shall I conclude the session? Yes, Abrikesh, you have some question, please.
Sir, in your PowerPoint slide number 21.
In my PowerPoint slide number 21, okay.
Last bullet point, there is one word used is illiquidity. Now, what is that illiquidity? So
illiquidity means, see, these are some, theoretical concepts. So basically, whenever you are expecting the cash flow, right? So you have to, whenever you are estimating the cash flow, you have to consider a lot of factors. For example, illiquidity means less liquid. अगर मार्केट में पैसा नहीं होगा, if the liquidity will not there be in the market, right, probably your cash flows will go down, correct? तो स्टैंडर्ड ये कहता है कि आपको ना, अगर कोई इलिक्विडिटी की आपको सिचुएशन लग रही है, फॉर एग्जांपल इन अ प्रोजेक्ट्स लार्ज मनी इज इन्वॉल्व्ड, राइट, एंड देयर कुड बी अ कैश क्राइसिस इन द मार्केट, सो इवन दोस काइंड ऑफ सिचुएशन यू नीड टू कंसिडर. अब आप कहोगे बीइंग अ सीए फाइनल स्टूडेंट हाउ कैन आई डू दैट? Even not being a CA final student, even being a chartered accountant, you cannot do that. And that is why you need to engage the valuers. These valuers do a lot of valuation. They refer a lot of reports. They refer a lot of the industry forecast, country forecasts. Okay.
Okay, sir. Thank you.
Yes, Pooja.
Sir, my doubt is from module page number 6.159.
Page number 6.
159.
Okay, page number 6.159. So let me go there. Yes, what is the doubt?
Sir, there is a notes given on that page. In that second point, they are saying that if the estimated amount of impairment loss is greater than the carrying amount of an asset, then entity shall recognize a liability. I'm not getting that point.
Yes. So generally what happens, in case of, have you heard about environmental waste management companies?
Yes, sir.
So generally what happens, let's say the company have some mobile phones, the company has an electronic waste like laptop, computer, right? So nowadays what happens, these companies, when the life of this computer, laptop, mobile will finish off, will end. So these companies have to engage this environmental waste management company so that they will dispose of this e-waste, so that they can dispose of this electronic waste in a very safe manner so that it will not impact the environment, right? And for that they have to charge a fees. Okay, for that they have to charge a fees. So there could be a situation where instead of getting a terminal positive cash flow, you will have a terminal cash flow which could be negative. राइट, आपका टर्मिनल कैश फ्लो नेगेटिव हो सकता है. अभी तक मैंने आपको जो एग्जांपल दिया था वो क्या था? टर्मिनल कैश फ्लो का पॉजिटिव था, रेसिडुअल वैल्यू, स्क्रैप वैल्यू, राइट? So instead of getting a scrap value, you are obligated to pay to that company to dispose of your electronic waste. So in those scenarios, what will happen? In those scenarios, if your outflows, your present value of outflows are more than your carrying value of the assets, in those cases, what will happen? A liability is required to be incurred. That is which is written in the 6.159, correct? When the amount estimated for an impairment loss is greater, क्यों होगा impairment loss का amount ज्यादा then the carrying amount, right? वो ज्यादा क्यों होगा impairment loss carrying value से? आपका एसेट की कैरिंग वैल्यू 10,000 है और आपका लॉस 11,000 है, मतलब पहले तो आप जीरो कर दोगे ना, उसको एसेट को जीरो कर दोगे. बट उससे ज्यादा कब होगी? जब आपकी एक लायबिलिटी होगी. लायबिलिटी किस केस में होगी? जो मैंने आपको अभी केस बताया, व्हेन देयर इज अ हायर टर्मिनल आउटफ्लो. ओके
सर, इस केस में अकाउंटिंग एंट्री कैसी पास होती है?
इस केस में अकाउंटिंग एंट्री क्या होगा? प्रोविजन करोगे. सो बेसिकली लेट्स से यू हैव टू रिकॉग्नाइज एन इम्पेयरमेंट लॉस. So what you will do, let's say in my example 10,000 is the carrying value, 11,000 is the total negative recoverable value. Okay, total negative recoverable value. Negative recoverable value का मतलब -11,000 आ गया. तो आप क्या करोगे? You need to credit your asset by 10,000. You need to credit your liability by 1,000, and you need to debit impairment loss by 11,000. Impairment loss P&L account debit 11,000, to asset 10,000, to provision 1,000.
Okay, sir.
Okay. Okay, thank you so much, students. And it's 9:51 now, so almost 10 to baji gaye. So let's conclude the session. And sorry if you find my energy is low and it is less today. So that the reason was I was not feeling well. So thank you so much, student. In the next class, we will be completing this Ind AS 36. Thank you so much. Yeah, session is over. Thank you.